Good afternoon, traders. Tate. Good afternoon. Good afternoon. All right, let's jump in. We should be live across the board here. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is basically the same here. I got out of symbol S. Basically hit my upside target. I haven't reported earnings yet this season. I think they're next week, but I'm not 100% sure. But I'm out of Sentinel 1. I will definitely look to rebuy a dip on that. But at this point, you know, I've been piecing out of some of these names as they got into my targets, and I'm probably not going to get back into any of them until after I'm back from vacation. So mid-September at this point. Feels good to be lightening up a little bit, even though I do still have these index level shorts that I would love to piece out of if the market could give the opportunity, but we cannot go down. We cannot go down. Microsoft just provided some preliminary guidance, and it is hitting the stock down a little bit. We've snapped back most of that already, though. It looks like. Microsoft guides Q1 intelligent cloud revenue 23.8 to 24.1 billion. Why are they coming out with this now and not when they just had their earnings?
They're saying it's at a investor presentation.
Seen down. Is that a change from their previous guidance here? 7:30 they guided. I'm just confused. They dropped their intelligent cloud Q1 revenue expectation from 63 to 65 billion to 24 billion, and the stock is not down like 20% on that. Am I misreading something here? That sounds like a it's overall. Oh, got it. Yeah, it's weird. It's worded weird. We need to see. It's kind of comparing apples and oranges. I need to see what that changes in order to have an understanding of whether or not it affects stock. Looks like there's a big quick downtick from the algos, and it snapped it right back up like it doesn't matter too much. Q's downticked really quick on that also, and then also have snapped back up. All right. What else? We got Zoom out. Kathy Wood is all out of Zoom. I didn't know that. It's interesting. This one is Zoom is interesting because I feel like every earnings report Zoom beats and moves up, and then they sell it right back down immediately. I don't really know what this stock needs to go, but maybe it's finally ready. Zoom beats on EPS, beats on revenue, and here's the guidance. They see their third quarter adjusted EPS nicely ahead of expectations, like 5-6 cents ahead of expectations. Wow, they're that profitable of a company? It's interesting. I just assumed that this was like unprofitable tech, but they actually make real money. On an EPS basis, at least. Okay, Zoom numbers look good. Zoom numbers look good. What about Snow? Snow down. Snow's had a pretty nice rally into this report, to be fair. Let's look at the numbers. Second quarter product revenue beats. Second quarter revenue beats. They see third quarter product revenue ahead of expectations by a little bit. Adjusted operating margin 3%. I don't know expectation on that. Product rev, fiscal year product rev expectations are, looks like also a beat. Yeah, also a beat. What's Snow trading down on? And a nice buyback. They authorized repurchase of additional $2.5 billion under their buyback program through March of 2027. Not sure what I'm missing on this snow. It looks decent to me. Snow trading down here, at least initially after hours. Those are our important reports. Pretty much outside the main part of earnings season, but we did see some retail report last night, this morning. A couple more names here, so we still got a little bit of companies coming out over the course of this week and next week, and then it's basically over. Let's take a look at the market. So the song kind of remains the same here. The S&P is up 0.3%, the Qs are up 0.5%, and the IWM is up, 1.4%. So the Russell, which was relatively weak yesterday, fully caught up today in this bounce back. The Russell chart in some ways is the best looking of the index charts, but that's also because it had been relatively weak, so it didn't get boosted up as much. Yeah, I don't know what to say. So first of all, it was a really weird day. At the end of the day, it was the exact same as we've seen similar, which is every time this market looks like it wants to break lower, you just run into this insane underlying bid that does not allow the market to break down. So from that perspective, things are the exact same as they've been. But it was a really weird trading session today with kind of what happened with the employment revision number coming out like 35 minutes late, which is really, really weird. And then it finally did. It was supposed to come out at 10 a.m. It didn't. There was all these rumors. No one knew what was going on. There's quick up move, quick down move. And then the number really came out more like on the 10:30 bar, actually. The reaction was on the 10:35 bar. It was initially higher. And then on the 10:45 bar, I don't know if this was related to that same thing or if this was related to the fact that we saw an Iran headline come out at 10:45 about like a no-fly zone as they're preparing to launch missiles over the course of the next couple of days, and then hit this market back down. So this was just a really, really weird, like 2 hours of trading here between 10 and noon or so. Did not know what to make. I've never seen numbers come out that late before. And then we were seeing that, the banks and folks that were actually calling in to the Bureau of Labor Statistics were actually able to get the number, but it was, I mean, that's what we saw, I think, is that some people got the number early by calling, and they weren't updating their website, and it was very bizarre, very, very bizarre. And then the subsequent price action was very bizarre also, the initial up move. So the bottom line, I don't remember exactly what the number was about 800,000 jobs that they, rewrote the number there to make it that there's less jobs, 818,000, which I think reduces the employment number by like 0.5%. So in other words, the employment situation has been worse than people have realized. These numbers have been better, have been reported better than they actually were. It's just a little weird. I really don't know what to make of this. It's the biggest revision of an employment number, I guess, since 2009. So it's not unusual to see these numbers get revised. It's kind of the size of it. We're seeing expectations between, a 300,000 to a 1 million revision. It came out to be 818,000. So that number was within expectations. Now, traditionally, as we all know, when we get economic numbers that are in line with expectations, you don't really get big moves off of it. You might get some volatility, but you tend to not get big moves. Big moves tend to come from surprises. It's just the weird part to me that I'm still struggling to wrap my head around, and it almost doesn't even matter from a market perspective, is I feel like if all of the previous numbers had been reported accurately as they came out, the market would have had much different reactions each time. Probably primarily negative reactions, especially as we got into the month of June, where we saw that bad news was really becoming bad news again from an employment perspective. But they weren't coming out in real time. They were coming out after the fact. And again, it was kind of known here that what it was going to look like, so it was in line with expectations, and therefore the market didn't really give any sort of a move off of it. So I don't know, the whole thing was just very bizarre to me. The revision itself is weird. The timing of it was weird. The market's reaction to it was weird. The coupling of the Iran headline at the same time was weird. It was just really strange price action here for these couple hours, and I kind of was left not even really knowing what to do with it in real time. But eventually the market decided to resolve lower. bounced back a little more than I would have liked it to have, but created technically a lower high and then a lower low. And, you know, from a technical analysis perspective, when we're starting to break down to new lows here and this volume is increasing, sure, you can get a little bit of an oversold bounce, but this actually looks like we're really about to break lower. But guess what? Every single time these last bunch of trading sessions, and I can point them out to you here on the charts, that it's looked like we should break lower, we do not. Today, we should have broken lower post-noon. Yesterday, at 1 o'clock, we broke lows. We should have been able to get continuation. We couldn't get continuation. The day before that, on Monday, there was a couple situations as well. I remember this at 10:15. I remember this negative Maribozu came in at the break to lows, and we watched the high of that. We should have been able to get followed through to the downside. We did not. Arguably at noon here also, if this negative Maribozu, we should have gotten followed through the downside. We did not. It's the same thing, guys. It's the same thing that I spent a lot of time talking about in yesterday's afternoon meeting. You are buying, or you are being short, or this market's trying to sell off into a relentless bid that doesn't care about technical analysis. It doesn't care about extension. It's not discretionary. It's not emotional. That bid is there until the buying based on the protocol of those systematic funds is ready to be done buying. And it's very, very hard to overwhelm that. You know, we discussed it yesterday's afternoon meeting, so basically just repeating myself, but what we're seeing for this week that we're in right now is that there is basically, you know, forced buying between the systematic funds and the corporate buybacks, about $12 billion of stock per day. So in order for the market to actually be able to give us a big move lower, you need so much selling to come into the market that it can overwhelm that. And then especially as time goes by, it becomes even more bullish for a couple reasons. One is I haven't seen an update on the gamma number recently, but I'm quite certain that that number has been moving higher throughout this week. So again, as you're going into the down move, that's even further buying from a different cohort from the market makers. And also, we're becoming less extended over time. So there's a less of an impulse for funds or discretionary traders, for people who are smart money like that, to be pressing to the short side, and if anything at a certain point are having to cover those hedges and cover those shorts. I mean, I'm a case in point, right? As time has started to go by here and I'm not getting the price correction starting yesterday and then more today, my rules are dictating to me that I have to cover some of my TQQQ, my leverage QQQ short position at a loss, which is what I've been slowly doing over the course of the last couple of days. So that's just additional buying. And at a certain point when this ADMA catches up, that probably can bring in even new buying from a different set of technical traders. So it's very hard to be able to get downside follow through in this market right now unless an event occurs that's so big that it can overwhelm the amount of forced buying, or the amount of forced buying that's in this market is done buying. And then we can potentially reassess, and we're still pretty far away from that. It seems like after this week, the CTAs will slow down a little bit on their buying, but potentially where the CTAs step back is right where the vol control funds step in with a lot more potential buying if we continue to have these closes. And you can see it in Pat's note this morning where it summarized the Nomura note that had that chart in there. We continue to get these closes that are between 0.5% down and 0.5% up. As soon as these CTAs are done buying, it's going to be time for the vol control funds to start buying. And that is why and how you circle back to what Rubner at Goldman's been talking about how it's very hard to be looking for the short between now and Labor Day, just because of all that. You know, it's very hard to fight that. And you're also in a tape that's just got less liquidity to begin with. Bill giving us the update here on these S&P realized vol data. Yeah. And you're about to get a lot of that drops out, which then increases that. So as I'm saying, as soon as these CTAs are slowing down on their buying, the vol control funds are going to start coming in on their buying. It's just it's very, very, very hard to be short this market right now. Is the point that I've been trying to get across for the entirety of this week. I'm still a big believer in game plans. I already had a game plan that got me building into these shorts. In hindsight, had I known this data earlier and I didn't, which is also part of the learning process, I would not have been nearly as aggressive as I was on the short side. I definitely still would have gotten short these indexes as we got $10 of extended, but not nearly with this degree of an aggressive game plan. So, at this point, it just kind of is what it is. I got to follow the game plan, and I'm at the point here with that game plan where it's having me begin to slowly, there's still room for me if something happens. I can get a little lucky maybe, but I'm starting to slowly piece out of these shorts. And I hate doing that at these degrees of extension because, we're not, the S&P at the close here is not at extreme extension anymore, but it's still pretty extended. And it closed around, 561 with the ADMA at about 552. So, we've still got $9 of extension in the SPYs. This is really not when I want to be buying stock, whether that's covering shorts or putting on new longs. It's really tactically not where I want to be doing this, but I've just got so much stock that I've got no choice. It's the prudent thing to do. The prudent thing is always to follow your game plan. Qs here are still $10 extension at the close. Again, that'll catch up a little bit tomorrow morning. And the IWM, like I said, in some ways is the most healthiest looking of the indexes because this one's never really gotten extremely extended to the upside in this move. Initially because it was relatively weak, but now it's actually been holding in better and maybe even playing some degree of catch-up. It certainly did today. That's pretty much it. I really don't think that there's any new updates. We spent a lot of time yesterday really just discussing the current situation as far as market dynamics go. And today is just, the song remains the same. It's the exact same thing. You find these technical spots where it looks like the market can push. It runs into this bid that's just sitting there, that's not going anywhere, and you can't get the follow through. And today's potential catalysts weren't enough. The unemployment revision was in line, it wasn't enough. Fed minutes as we expected was a non-event, wasn't enough to do anything. And here we are. In a spot where it continues to be very difficult to buy because you don't want to be buying this degree of extension, but any sort of aggressive shorting has been very hard. Finding strategies that can enable you to work the ranges have really been the best situation, which I've been able to do a little bit, but not to the point where it's going to cover the amount that I'm down or anywhere close to the amount that I'm down on those shorts, which really have just been performance drags on me, so I'm just more annoyed about them than anything, but it is what it is. That's all that I've got. I'm happy to answer any questions that you guys have. Anything in the YouTube? Nothing new in the VTF. If anybody has anything for the VTF, feel free to post it. I'll pop over to the YouTube from Kevin. The Qs have been playing previous day close levels very well. Yeah, for sure. Thought the Qs would retest 480, 480.20, which is basically yesterday's close. When it broke lower and continued to dip, but they rebid it so randomly. Yeah, I don't think it's random. I mean, I just think that there's a lot of buying that you're running into on the way down. I don't necessarily think it's random. I just think that you got a little bit of a push lower of maybe some stops on the break of this previous early low, but there's no follow through on it. There's just not enough sellers out there to overwhelm the underlying bid to this market, and then you just pop right back up. And then when you begin to pop right back up, once you negate this candle at noon, all that sell volume that came in here was proven wrong, and then it just makes it even easier for the market to move higher, because now those buyers need to buy back in, the short sellers need to buy stop themselves out, and you can get an additional wave higher. Just really tough to be short. From Cyril, so basically we don't know how long forced buying will be, but while it is happening, we're going up or sideways. So not necessarily. It is conceivable, especially if an event hits. It's usually what you need for there to be enough selling that can come in to overwhelm the amount of forced buying that's been there. But you kind of need an event to have that happen at this point. I mean, look, technically there's still room for a feedback cycle of selling. That could be enough that potentially pushes us lower for a price correction. But you need selling some way, somehow, that can overwhelm that. It's not impossible. It's just difficult. It's lower probability, and every day that goes by, it's increasingly lower probability until they're done buying. That's kind of what you just said there. But especially if the vol funds start picking up where the CTAs begin to leave off, it's probably not happening in August, unless Jerome Powell really disappoints, which that could be an event. And I still think that there is some decent potential for Powell to disappoint, because I still think that the market is overpricing in the probability of a 50% cut in September, or NVIDIA. And NVIDIA's basically, the month is over at that point. And then I go on vacation and liquidate my shorts and just take a big loss on it, just in time for us to then have a bigger potential to be able to pull back. It's going to be really annoying to me if I still have a decent short position on and I'm about to leave, and it looks to me like there finally is becoming more potential for the pullback. I'll have to figure out what I want to do, because I'm trying to position myself more so than usual to not really trade on this trip I'm going on. But that's my problem. From Kevin, how do you balance between game planning versus predicting? I'm sure it's a delicate balance between catching the move early versus catching it late, but curious your process. So, game planning versus predicting. I don't really like that word, predicting. What I'm doing when I trade is I'm finding trade setups and then having game plans around them. So if you want to use the word predicting, really what you're describing is how do you balance game planning and a trade setup. And I don't need to balance that, because they're two completely different things. The trade, or the prediction, if you want to call it that, and I don't like the term, the trade is the trade setup. It's the breakout, it's the shooting star, it's the hammer, it's the bull flag, it's the that's the trade. Your prediction is built in with the trade. There's a bull flag that's coming in here that says that I need to have a game plan. I need to take this buy of this bull flag because I'm expecting it to move higher because it's a bull flag, and then you just build a game plan that manages your risk and manages your reward maximization around that. You're referring more to starting to build into your cues early. Sure. All right. I understand. What you were saying. So the question was more of what I'm doing in terms of how I built into the short side. Sure. So, trying to think about how I want to answer this. It's the same thing. It's still a trade, right? The way that I've designed now, like hedging myself in the market, is my hedges are really trades themselves that act as hedges, which has the benefit of allowing me to be a little bit looser on risk at certain times, because I know that if the short's going against me, the longs are kind of moving in my favor, so it allows me to be a little bit looser than I would be otherwise. But it's still a trade, and it's a trade that I've spoken about in the past, in the last couple months. I was doing it a lot more in July and even June on small time frame trades where we would extend, and then I would basically have a trade game plan that's versus the ADMA on a 5-minute chart. In this case, I'm doing the same thing. I have a trade plan that's basically versus the ADMA on the daily chart. So my stop loss, if you will, and my game plan is just based off of this ADMA. I did start earlier than I typically do, and that was because of the degree of the move from highs to lows. I felt at the time that it was worth it to start a little bit early, because, and I even thought that we would actually overshoot to the upside, but like I said, I thought an overshoot to the upside was going to be, you know, not a move to, you know, QQQ 480. I thought it was going to be a move to QQQ 460, QQQ low 460s, like that kind of area. So we weren't technically at that like same $10 of upside extension at that point, but it was a move from, you know, 424 to, you know, 464. You know, $40 up move in the Qs in a handful of days. I wanted to protect myself a little bit to look for just more of a technical pullback to create the higher low, because that's usually how markets work. So I did do that game plan differently, and I've mentioned, and this is accurate, I actually, I'm short the TQQQ, but I actually have two different trades going on at the same time in that TQQQ. One is actually still based off of that concept of a deeper pullback where my target's not the ADMA. The other trade that I put on was actually similar to what I normally do. I just actually did it with a little bit more size, a little bit more aggressive than I normally do, which was once we get to $10 plus extension, I actually implemented like a second QQQ trade at the same time that's designed to profit or hedge or both, just based off of a correction to the ADMA. So now I've got kind of two trades going on at the same time. One's a lighter trade that I started very early at like 460 or something like that, on the TQQQ, looking for a bigger pullback, potential higher low situation. And I probably would still keep some of that even if we overshot the ADMA, if that started to happen tomorrow. The other is the more aggressive trade looking for a satisfaction of extension. But obviously neither of those are happening, so I'm just getting kind of my face ripped off a little bit on both at this point, which just sucks. And you know, starting to piece out and take some off at a loss on the more aggressive trade as the ADMA catches up. Have not started to take any off on the other trade that's basically looking for and waiting for an eventual pivot that has to come in at some point. But it might not come in until the beginning of September based on some of the data we're seeing, unless we get an event. So very tough. Very, very tough. Hope that helps, Kevin. From UVixie Bull, can you provide an opinion on buying the SVixie on margin? That's the inverse VIX ETF, right? Buying the SVixie on margin. For a large buy and hold account for a friend who has never traded but wants to safely buy dips on margin. I would not do it in this product. Baseline assumption is that markets will never dip plus 75%, and therefore a 1 in 10 equity to margin position is safe. I wouldn't do it and I wouldn't do this in SVixie. These products are terrible. I know that this is the short one, so it's been okay, but these are really bad products. I would not. I just would not buy this on margin. I wouldn't buy this on cash. This is a trading vehicle. So I don't know, and it's hard for me to give much of an opinion on that. I don't know the person. I don't know the account size. I mean, I can say very generally, if you're talking about a larger buy and hold account for a friend, what I recommend for people who do that, if I recommend anything, is that all the studies show that for investors, the best thing to do is just dollar cost average into companies that you believe in over time, and indexes. So I wouldn't be messing around with SVixie. I'd be messing around with the S&P or some major companies that you use the products of and that you enjoy and like. So probably not the answer you're looking for, but the answer all the same. Anything else, ladies and gentlemen? There's really nothing new today. You know, really nothing new today outside of the wacky price action we had, but everything else is just the exact same. It is so hard to be short this market, and I hate being short, and I'm so annoyed that I'm short. Like, I want out of these positions so bad, but you know how I am. Follow the game plan, follow the letter of the law, till death do us part, because that's what breeds consistency in the long run. Yep. Yeah, this market almost is having me want to just like do something I haven't done in 8 years, which is just liquidate all my positions and actually go on vacation and not look at the market for 2 weeks. But I doubt that I'm going to do that fully. But I'm probably going to try to size down to a very low point compared to usual, where it's relatively inconsequential. It's just been a wild market because I made so much money on the long side of that first bounce, and I'm still making money here in the latter part of the bounce. But I am dramatically underperforming the latter part of the bounce by being so heavy on the short side in some of these other stocks. So it's not like it's costing me money. I'm just like getting in my own head because I generally don't like being short, and I'm usually much less aggressive on the short side. And just looking at how much I'm down on these shorts with and this is the wrong way to think, and this is probably why I need to take a break and go on vacation. I'm just looking at how much more money I would be up and how much more money I would have made in this up move had I not put these shorts on. It probably would be one of the more profitable short periods of time in my entire career, actually, if not the most profitable, rivaling this other time which we nailed it. And I did have shorts on the way up here too in that November, but I was not aggressive on them like I am now, and that's the difference. But I still am not big picture bullish on this market. Is the other situation. It's just that I understand when the flows are really big like they are, you don't want to fight them. You want to wait for them to not be that way. And then I still think that short trade is still actually there. It's just if we don't get a catalyst and you're fighting this forced buying for the next week and a half, if you're fighting this forced buying for the next week and a half, where are we when that potential opportunity and potential trade actually finally comes in? Is it SPY 575, SPY 580? And if you're shorting here and maintaining that for the rest of the time, I mean, forget about the performance drag of it. It just becomes extremely painful and frustrating. So it's funny. It still had a great overall move in my P&L here to the upside throughout this market move in August, and yet these last few days it's like, oh my god, why am I short when I know there's $12 billion of buying happening every day? Yet I'm still not big picture bullish. I'm repeating myself now. But we'll see. We'll see what I do. It's still a week and a half until I got to make a decision on just how much exposure I want to have as I go away. And it's also going to be tricky because I'm going to be in Asia. It's like, am I going to be up all night watching the market and fretting about it? Probably not. From Cold Smoke Brian. So am I correct in understanding it that you can take the pain in the short because you have enough long to cover it, and that's why you aren't bailing? Yeah, I mean, I'm down a boatload of money in the Qs and the IWM shorts over the course of the last week plus, but my account itself is still made money over the course of that period of time, and that's the point of tactical extension shorts in some way, and that's why up until this time I've been able to have pretty much a 100% success rate on that $10 upside extension of trade, is because even when the markets continue to move higher, as long as the game plan hasn't been too aggressive, I'm not dealing with any real pain. I'm just having some performance drag, and then I don't need to time the short perfectly. I just need the correction of that extension, which happens every single time through time or price eventually, to eventually happen like it always does. And then whether it's through time and I'm able to work ranges but slowly piece out as it becomes less extended, or through price, which becomes even more profitable because then I get the big pullback and I just cover the whole short on the pullback, and now we're not extended at all anymore and I'm back to being long. It's been able to give a 100% success rate up through now, though that's probably breaking this time. And maybe it even wouldn't if I was as aggressive on that short as I was back last November as I was here. Then maybe it still wouldn't even be a negative trade at the end of the day. But just knowing where my game plan is now on the trade and how out of the money I am on that trade, then it becomes just based on math of the game plan, basically impossible for me to finish positive in those names at this point. It's just a matter of how negative will the P&L be by the time I get out of them. I don't want to say impossible. It actually is still possible for me to get back to break even or even green a little bit on them, but definitely not pretty unlikely, and whatever. It just is what it is. And I have a game plan, so like I'm always saying, I am a stickler to my game plans no matter what the situation is. So I hate the fact that I'm short right now. I don't like being short. What I hate more than anything is that I'm beginning to take off my short into extreme extension. It's like, I don't want to say it's a rule. It's not a rule, because the rule is to follow my game plan, but the rule should be that the game plan says that I shouldn't ever have to be able to cover any shorts. Like I hate the idea in the same way that I'm saying every morning we should not be doing any longs right now. I hate the idea of covering shorts for a loss here also, because we still have $9-10 of extension. It's not where you want to be buying stock, whether that's short covering for a loss or for a gain even, or new buying. It is not what I want to be doing here, but I'm forced to do that just because of the amount of size that I have. I'm starting to again slowly size down right now, but at certain points here I've probably been more short, maybe not on a net basis, but if you just looked at the amount of not on a net basis, but if you just looked at the shorts that I have on in a vacuum, it's probably heavier than I've almost ever had them, and that sucks because we're at highs. Brian saying, I get what you're doing. Douglas talks about this in his book, identifying game plans that have probabilities in your favor and consistently applying and following those game plans. Yeah, and that's what it comes down to. It's like, I in hindsight, with the gift of hindsight, and again, I started building out these game plans with information that I don't have now, and getting involved in the trade last week. I didn't have all the information that I have this week. I hate the game plan that I have for my trade. I hate how aggressive it is. But the fact of the matter is that the trade's already on. So I'm not going to change that as it comes. I'm just going to follow that game plan, which now has started to morph into the part of the, sizing down for a loss part, unless I can get a very, very fast pull-in that starts basically immediately, which, again, could happen. We are extended. You can definitely get price corrections off extension. Someone mentioned we got PMI tomorrow. Maybe that helps. We got Jerome Powell on Friday. There is still room, but it'll be difficult for me unless I get like a really big gap down to be able to be positive. So we'll see. Woof. Always keeping it real with you guys. Always keeping it honest. The good and the bad. We get to spend a lot of time talking about the good, and sometimes we have to talk about the bad, but it just is what it is. It's how trading works. So I will wrap it up there with the usual. Have a wonderful night, everybody, and I'll see you all tomorrow, where we will deal with an underlying bid to the market that does not allow down moves to happen. Or maybe it does. We'll see. Good night.